Hello everybody, welcome back. Let's have a look at XRP. We'll make it short and fast, not much to talk about, but it does look quite interesting for what it's worth. This was our big breakout, this is our consolidation trend line, this was our breakout, this was our liquidity grab for the market. So, makes it a little bit more interesting to look at, because what you might think about, if we were to see this chart on its own and nothing else existed apart from XRP, you'd look at this and go, geez. Excuse me, you might not cough like that, but you might look at it and go, my god, that's one hell of a fake out. But it wasn't really. This was a genuine breakout, and this would have continued if it wasn't for Bitcoin having its pullback, dump, crash, or liquidity grab, whatever you want to call it, and so this was brought down with it. Now the good thing is that we did have a nasty crash, but all candle bodies so far have closed up, above the green 50 exponential, and so far we've come back within this descending trend line of consolidation. So it's almost as if this never existed. It's almost as if it never happened, right? And so we can imagine that it didn't happen really, and we're back within this formation. Now, as you can see, the moving averages here are basically continuing the consolidation trend line. So we've got the 10 exponential mostly, and we've got the 21 here. We've also got the center of this Bollinger Band, which is the 20. And it's basically creating a triangle wedge formation, really, more of a triangle vibe, based upon moving averages. We don't even need this anymore, so we will get rid of it. But I mean, if you just think about what we're looking at now, it's just continuing that formation. We put it back in just for fun, so you can see what's really going on, and this is kind of the vibe, isn't it? Really, this is more or less what's taken place. So this would suggest that there is an apex forming, and the problem I have with these sort of situations is that the closer you get to an apex, the closer you get to the end of the formation, the less reliable the either breakout or breakdown will be. And so it might be the case that we do have a breakout and we don't have a candle body closure, but we have a breakout above and maybe a rejection from somewhere along the lines of $1.15, and then a breakdown from there. And then finally, at that point, then we continue. Now, if we think about, based upon moving averages and the relationship to the price, it's actually not the worst chart we've seen. It's actually okay. I mean, we look at this and we often think of XLM as like it's as some people think it's better, and it is, for better or for worse, the XRP chart is way better. We don't even have a golden cross on the XLM chart. On the XRP chart, we had one way back here, and essentially, we've been moving up slowly but surely ever since then. XRP does like to move like this, moves up and down and up and down. It just does that, all right? XLM has a bit more of a consistent approach to its moves, but so far it's not really wanting to do anything. So we're still waiting on it. Now the problem for XRP would be if we start closing candle bodies, probably I would say about $1.04. If we start to close candle bodies below there, which is more or less just below the green 50 exponential, that's where we start to entertain the idea that we come down a lot lower into the upper 80s towards the 200 exponential. Personally, we might get wicks down there like we had on this occasion. If you watched my video yesterday, or if you're a member of the Patreon, I was doing the live stream last night. Long story short is that I do think that it looks like the dollar, the Dixie, so the dollar index, does look like it wants to break out, even just for a small, just for a couple of moves, up to 94 to 95, which might cause a shock in all markets, anything pegged to a dollar, major indices, commodities, obviously forex and crypto. So I think that there is a strong chance that will happen. Doesn't mean it definitely will, and if that were to happen, it would mean that there would be a temporary dip, and this dip would be the one that gets bought because it's based around the Dixie, and the Dixie causing shock in the market. And I think that there is a strong chance that will happen this week. So from any time from Monday when markets open, throughout the week, maybe the week after that. But then after that level, 94 or 95 gets hit, and then it's downtrend central for the Dixie for the rest of this year, and then into next year I think it'll increase in value. Anyway, I made that video yesterday. You'll have to have a look at it to make sense of it. All I'm trying to say is that if the Dixie does do what I think it's going to do, it's likely to cause a shock in the market, which would mean that there will be a dip across the board, and that dip is the one that gets bought and should be bought, because that's the dip that will then go into the rest of the bull market and might be the lowest dip you'll get for the bull run. The bull run that's going to complete this year into the beginning of next year, in my opinion. And things like XRP, you know, will benefit just like everything will. And XRP's got its own market cycle due to complete at the end of this year. Last time it did it, more or less did it at the very end of the year, and I'm thinking we're looking for the same kind of chart formation on the long term that we did in the last 4-year cycle. It's pretty much mimicking what it did in the past. This time round more bullish, but you know, with diminishing returns. So my expectation for XRP would be at least $4, and then maybe we'll see where we go from there. Either way, the next dip gets bought by me and longed by me, and it's based around the Dixie, not so much about the crypto. Anyway, I'll leave it with you there. I went off on a tangent. Hope you have a nice day, and take it easy.